First question is define and explain thoroughly what is credit. So credit is a contractual agreement in which a borrower receives something of value now and agrees to repay it later. So it's just a promise or an agreement that, hey, I'm gonna use this amount from you, and then I'm just going to pay you in the future. So that is credit. So second question is describe the credit economy. So a credit economy is an economic system where the majority of transactions are not settled with immediate cash but through extension of credit. So in this system, with the credit economy, consumption is pulled forward. So because people can now borrow money, so they can buy more goods because they can just repay it later. So people buy homes, cars, and education using future income. So they can have the car now, pay later. They can have a home now and just pay later. Also, in the US, we have this system of student loan where they can pursue their education now without money but just pay it later. So if credit does not exist, then it there's no there's no such thing in the economy. So people cannot buy something easily because they have limited cash. So because of credit, that's why the economy it somehow helps the economy because people can buy and purchase something and just pay it later. And they also this is good as well because it encourages the people to work because they have something to pay in the future, and that boosts the economy or help the economy in some other way. So second thing is investment is fueled. Businesses can use debt or credit to expand their operations. So for example, if I have a business now that is working properly, but I mean the business is working properly. However, I don't have the enough funds to um, build another branch. So I can just have a loan or credit and then use that credit to build the another branch, and then using the new branch income, then I can just repay it. Without credit, then I cannot simply build it easily. So um, I will have to wait for my month. I will have to wait until I have that money enough to build that another branch. So third is money supply. So most of what we consider money in the modern world is actually credit created by commercial banks. So many of our economy right now is supported by credit. So that's why we Philippines have this trillion of debts, and because of that trillion of debts, we were able to build infrastructure. So looking at the economy, it's great. Oh, they have this such buildings, they have this um, nice roads, but behind it, it is supplied or um, financed by a credit of that nation. So third question is enumerate and explain advantages and disadvantages of credit money. So advantages, there are three I can say. First is economic growth. So like what I said, because of debt or credit, there's a grow in economy because government can finance their operations such as building new buildings and um, highways, roads, and any other infrastructure because of that debt or credit money. And also the next advantages is financial flexibility. So allows for handling emergencies without liquid cash. So for example, if before the pandemic, so because of debt or credit, we were able to somehow finance the needed operations to fight the pandemic. So third advantages is capital formation. So enables large projects that cash couldn't fund alone. So we can still relate it to government if they have um, some sort of project that is needed to be done as soon as possible and they don't have the enough money to back it, so they can use credit for just for it to be working and then just pay it later. So disadvantages is that over indebtedness. So consumers may spend beyond their means. So because of this, disadvantages is happening to a lot of people right now, especially the middle class and the lower class, where they think that they can afford it because of credit, but they overlook that they cannot really afford it. So for example, you have a salary of 20K a month, and then you have a credit of 20K a month as well. So somehow you think that, oh, I have a 40K a month now. However, you don't realize that that 20K is not yours. You were just able to use it, but you need to pay it. So if you're not careful enough, then you will be in debt. And then inflation risk, that is the second disadvantage. Excessive credit can drive up prices. So if you have many money because of the credit, so just the law of supply and demand, you have a many supply of money, then the demand of goods is lowered down. So that will cause some price inflation. And then third disadvantage is financial instability. If many people default at once, it can cause a breaking or market crash. So yeah, just like this, inflation, because so many money as well. So there are no goods enough to buy from those money that the people have. So the fourth question is, sorry, enumerate and explain the foundations of credit. So lenders typically look at 5 pillars to decide if someone is credit worthy. So if you loan from a bank or a credit card, if you apply for a credit card, these are the 5 factors that lenders will typically look out to you. So first is your character. So if your reputation and track record of paying debts. So if you have a prior credit cards or loans, and then you have a good record of paying it, then that would be a good point. And then capacity, your ability to repay the loan based on your current income and job stability. So if you're just 1 month of your job, then that would be a bad sign for you. So if you're in 5 years in your job, then banks can think that, oh, maybe you have a stable job and then you can pay your loan. And third is the capital, the amount of personal money or assets you have already invested. So if you have house, car, and then cash from the bank, huge amount, something. So yeah, that could be a good point as well. And collateral is the fourth character. I mean, and and the banks will look if you have that assets like a car, home, and then that they can seize. So they will be confident to lend you money. And then conditions, that is the fifth one, outside factors like state of the economy or the specific purpose of the loan. So your purpose of the loan will determine if the bank will offer you the money. So if they see that your purpose is good, then you have that another point. So fifth question is enumerate and explain the basic characteristics of credit. So first is trust. So the psychological basis of the transaction. So if you trust someone, then you will probably lend her money. And then time, there's always a gap between the receipt of goods, money, and the repayment. So if you pay your debt at the agreed time, then it will be good. And then there also the risk, the possibility that the borrower may not be able to fulfill the obligation. And then fourth is the interest, the price paid for the privilege of using someone else's money. So if you borrowed 1,000 from your friend, and then he or she put you a condition that, hey, pay this 1 week from now or not, you will add 100 for the 1,000. So yeah, that is interest. So number 6 question is, what is a credit card, and explain its advantages and disadvantages. So a credit card, it is a physical or digital card that allows you to borrow funds from a pre-approved limit to make purchases. So I managed to have a credit card. So this credit card, it has this specific amount that you can use to purchase something or pay for something, and then by the end of the month you can just choose to pay all of it or pay all the funds that you use from that card, or you can pay the minimum that is required. So one advantage is that it's convenience. So no need to carry cash. You can just swipe or scan your card to pay for something. And also the second advantage is that it has a reward. So every transaction you will have some sort of rewards, and then once it all add up, then you can use it. Like for example, free gasoline for your cars and motor, and then for um what I've tried or experienced is that I've reached the points where I can use it to eat at Vikings, which is an eat all you can restaurant. And then consumer protection is the third advantage. Easier to dispute if there's fraudulent charges. So if you have a credit card and then for some reason it was hacked and used by hackers to purchase something, then you can just easily dispute it because the bank will work it for you, because it's their money after all. Unlike if you use your own money or cash, then it's your problem. So let's go to the disadvantages. So first is high interest. So if you're not careful enough and you just overlook it, and you're spending you're spending above your means, so the high interest can kill you. You will not notice that um, due to late payments every month, then the interest builds up and you will be having a hard time to pay it all. And then the second disadvantage is that there's hidden fees. So like I mentioned a while ago, every transactions, if you're not careful, there are some stores or establishment that provides this percentage from your transaction. Then if it will build up, then um, it will be a large amount. And then there's also the third disadvantage, which is debt trap. So this is bad because if you spend above your means and then you think that you have that money, and you don't think that it's not your money after all, it was just it just allowed you to use that, but you need to pay it. And then when you pay it every month, you just pay the minimum. So you always have this cycle of debt. So the seventh question is enumerate and explain classifications of credit. So there are three classifications. So by maturity, by security, and by user. So let's go by maturity. So there are three: short term, medium term, and long term. First is short term, which is you need to repay it within a year, and medium term is 1 to 5 years, and long term is over 5 years. And then by security, there's this one subclassification, which is secured. These are the loans that is backed by collateral, for example, house or car. And then there's unsecured. The second one is the unsecured, which is backed by only a promise that you need to pay it at that certain time. And then the third is by user. There are three options as well. Three types, which is the consumer credit, commercial business credit, and public or government credit. So consumer credit is for like me, for personal use, for example, payment of goods at a store or buying clothes at a store. So that is consumer credit. There's also commercial credit or business credit, which is companies using to fund operations, like my examples a while ago, where you need to build a branch. If you have a business and you need to build a branch, then that is commercial or business credit. Also, there's the third thing is the public government credit, which is example is by nations to fund infrastructure or deficits. So deficits is when they have this certain money, like for example 1 billion for this for this year, and then they figure out that they needed 1.5 billion to spend on that year, so they can take a loan for the remaining 500,000, so that the next year budget can be fulfilled, and then they will just have to find a way to just repay it. That's all. Thank you.